Welcome back. You're watching Midcap Radar on CNBC-TV18. Let's put the spotlight on Action Construction Equipment. The company is down in trade after the company reported its Q4 numbers. The company has missed their revenue guidance for FY25 marginally. To discuss this and more, we now are being joined by Saurabh Agarwal, who is the Executive Director at the company. Good afternoon to you, Mr. Agarwal. You had guided for 15% year-on-year growth in the top line in FY25, while you've posted a revenue growth of somewhere around 14%, which is much lower as compared to your guidance. So what has led to the miss this time around?
Nothing much. We missed it by about a percentage. So when the year started, we were hopeful that we should be able to do something around 15 to 20%. But I think after the second quarter, and especially after the election results, we toned it down rather from a 15 to 20% to 15%. And yes, unfortunately, we missed it by about a percentage. So we are a little upwards of 14%. But I think that's how life is.
Sure, and this 14% to 15% revenue growth, that guidance that you've given for FY26 is much slower as compared to what you've done in the previous years, wherein you've grown by almost 30%. So why is this moderation in growth coming through?
See, the overall scenario seems to be a little, out of place with respect to whether it's geopolitics, whether it is, let's say the export potential out of going out of the country, and also keeping in mind that the manufacturing is also a big, customer segment for us. So looking at the holistic picture, and especially, the quarter one, which has started, is a little subdued. And primarily because, there has been a transition from BS3, BS4 emission norms to BS5, and the costs and pricing for customers have increased. So, there is a little delay in ordering. So because of a weak Q1, which we feel can be weak. So the entire year is going to be affected. So that's why we're pegging it around 14-15%. But I still feel that, again, end of quarter two is the right time to be able to, precisely know what is going to happen in the year.
Understood that, Saurabh. So for H1, you're anticipating a slightly muted execution trend, which is what is leading you to give a slightly subdued guidance of 14 to 15%. End of H1, you expected to get revised higher, if we've got that right. Give us a sense of execution trends on ground. You've said that there is a bit of a slowdown. Also, is there any issues in terms of raw material availability? That's also something that folks across the industry have highlighted. And what is the EBITDA margin that you're penciling in for FY26?
There are no execution issues. And there are no supply chain or any other issues of any type. It's just that there is slowness in the market, and especially after this altercation which has happened between India and Pakistan. So the things have, they've come to some sort of a, let's say, more slowness, or let's say to some sort of a standstill, especially in the last 10-15 days, started to improve now. And with respect to our margins, I think our margin profile between 17 to 18% is what I think we should be easily able to maintain, if not increase it. That's what we are looking at.
All right. And, out of the 14 to 15% growth that you've guided for, how much of it would come through volumes?
See, what we have currently planned and projected, I think about 7-8% is going to come through price increase. And I think about another 7-8% is going to come through volumes. The volumes can be more than this. And that's why, we'll have to wait till end of quarter two to figure out.
How would each of your, end user equipments do, cranes, material handling, how would they grow in FY26?
See, we have two main segments. One is crane, metal handling and construction equipment. And the other is agri. Agri is about 7% of our business. So we are looking at a 14-15% on both ends. And within cranes, construction equipment and metal handling, we feel that in this year, maybe the metal handling and the construction equipment will be slightly faster than cranes within that segment. But on the whole, I think both our main segments will grow at about 14-15%.
Okay. Sort of, in your presentation, you've also highlighted a large win that you've got as from the Ministry of Defence, close to 420 crores worth of an order coming in there. Any visibility on further order wins you're expecting from there, given that this is expected to be a high spend year? And number two, exports currently 8 to 10% of the total pie. What is the kind of growth you're penciling in there?
Yeah, this government order, this Indian defense order, is one of our largest in any sense, whether, this is our largest order. And obviously, we got getting it from the Indian defense, really makes us feel very proud. We've been working on this last 2-3 years and gone through the entire process. So, hopefully we'll be starting execution Q3 onwards, and we have a 3-year time frame to finish this. But we'll try and do this a little bit in this year and most of it in the next year. So that's how and obviously our total order book with respect to defense is close to 485 crores. So, some more part of the defense orders, other orders will also get executed in this year. And it's a continuous process. It keeps on happening. Yes, this is a big one that has come across. And yes, in the export sector, we definitely look at, doing a 10% plus with respect to contribution from the export. Last year was really not great for us with respect to export, but I'm sure we will pick up again.
Sure, and you also have a JV with Kato. So the production was expected to start in the second half of this year. So is this largely on track? And when this does happen, what is the kind of revenue contribution as well as the margin potential that you're expecting?
Yeah, hopefully we should be able to start sometime in Q3, Q4. No, sorry, Q2, Q3. Sorry. And the immediate revenue potential will be close to about 400 crores, which can be achieved in 1 or 2 years once we start. And over a slightly longer period, this can easily expect 800 to 1,000 crores.
Okay. Saurabh, another question that across the industry, what we are getting is newer emission norms this time around. Are they impacting your product mix, your sales mix in any sort of manner? Has there been a certain element of pre-buying already that has occurred, especially as far as the value chain is concerned? And do you enjoy higher margins given the fact that you would have had to take price hikes?
There was definitely some pre-buying starting from December. Putting a percentage to it could be around maybe 10-12%. Okay. That is also another reason for a slightly weaker start to this year. And we have taken price hikes according to our input cost increase because of the BS5 engines and the electronics. And it is prominent to note that, engines below 50 horsepower, which is about 60% of our production with respect to equipment using that, there the price increase is much cheaper. Is about 12 to 13% range. So that is where the dilemma between the buyers. It takes 1 or 2 months to settle down. So hopefully everything should evolve well going forward in the next month and definitely July onwards. Yes, sure. We have one thing in mind that the first half is traditionally slow for us, and then with monsoons and everything coming in, and second half is much bigger for us. It's about 55-60% of our revenue. So hopefully it has played out like that in the last 30 years and it will again.
Sure. And if you can just help me with your capacity utilization levels, what were they at? What is the Capex that you're planning for FY26 and what segment would it largely be towards?
Yeah, our capacity utilization, we expanded our capacity in the last year and some of it was put in place in Q4. So keeping that in mind, for the last quarter, we were at about 70% capacity utilization, blended with respect to our cranes and construction equipment metal handling business. And with respect to Capex, I think last year we did close to 144 crores and most of it going towards expansion and modernization. And we also bought some land for future expansion. And for the current year, we have a plan of close to 300 to 350 crores, out of which about 100 crores is planned for modernization and upgradation. And we are starting to build a new plant for our tower cranes, especially, with a total investment of about 250 crores approximately. So about 100 crores of that would be spent in this year. And yes, the balance of the land for which we have already signed contracts and agreements, so that will be executed. So we will close about 150 crores. We're going for lands which we are procuring for future expansion.
Right. Thank you so much, Saurabh, for joining us, giving us a sense of how exactly business is panning out. H1 slightly subdued, but we expect a strong pickup H2 onwards. Thank you once again and wish you all the best for FY26. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.